What is going on, everybody? Mr. Influence here, bringing you another crypto video. In this video we will be talking about why I believe Bitcoin will turn very bullish very quickly. Now you might be wondering why I have the Bitcoin chart open with the S&P 500, Nasdaq chart, and gold chart. You will see further into this video, so just keep watching. So let's get right into it. Mr. Influence, why the hell do you think Bitcoin will turn bullish very quickly when mainstream media is saying crypto is dead and Bitcoin is a scam? Well, the reason why is inverted yield curve. Now I won't go much into this. I will just show you guys a quick definition, as I have a planned video to go more into this. Basically, every time we've had an inverted yield curve, we had a recession, and that's what's happening right now. What is an inverted yield curve? An inverted yield curve is an interest rate environment in which long-term debt instruments have a lower yield than short-term debt instruments of the same credit quality. This type of yield curve is the rarest of the three main curve types and is considered to be a predictor of economic recession. If you guys want to check out the rest of this, just check the link in the description. Now, if there's a recession, people will start buying Bitcoin. Look at what's happening with negotiations between America and China and what the stock markets are doing right now. It's looking like Bitcoin is really going to start heading towards becoming the digital gold. Let me paint a bigger picture for you guys. It's hard to picture because we're not there yet, but I will try my best to show you guys what I mean. So going back to the end of last year and the beginning of this year, it looked like there was no top to the economy. Equity markets were going up as Bitcoin was going down. You'll see why this is important in a minute. Even if there's a recession, won't money go into US dollar and gold or more stable hedges? Well, you have to realize what the industrial average is, and what the industrial average represents is the industrial era. It represents investments in Warren Buffett's era. What did Warren Buffett invest in? He invested in mechanics and electronics. Electronics are not digital. Electronics are still hardware and industrial. The value in gold and silver isn't just in gold and silver. It's in its usability and its industrial demand. Once the industrial era is over, what do you think will happen to the value of gold and silver? There won't be as much institutional demand for gold and silver as there was in the 80s and 90s. There isn't as much circuit boards and chips being made using precious metals. So the value of precious metals will go down, and it won't be as effective of a hedge as it was 20 years ago. Because industrial averages are going to go down, the companies and these industries that used and actually created real world price demand for gold and silver won't be doing as much anymore. So what's going to happen is the world will need a hedge. Whenever something goes down, there's always something that goes up. Gold and silver will probably still go up a little bit, but not as much as people would expect it to. Why? Because Bitcoin. Now imagine a sine wave, a really big slow moving sine wave, which is this right here, and then introduce a really fast moving cosine wave on top of that. Where do they intersect? They intersect once at the top and once at the bottom. At the top, the cosine wave ends up going down and the sine wave keeps going up. At the bottom, the reverse happens. The cosine wave goes up exponentially while the sine wave keeps going down. Why am I bringing this up? Because it's exactly what happened December of last year and the beginning of this year. Equity markets hit the top and kept going up while Bitcoin crashed. The equity markets are slow and they have government bailouts. Because government bailouts can happen, the falls of equity markets tend to be more tampered. Guess what's not tampered? Bitcoin. So since the equity markets kept going up while Bitcoin crashed and is leading the downwards movement, if the equity markets cause a recession, the recession is also going to be slower than the rate that the Bitcoin goes down. Which means, guess what's going to hit bottom first? Bitcoin. Bitcoin is going to hit the bottom as equity markets start to go down. Then guess where all that money has to go as a hedge? Not as much gold anymore. People will realize, and look what's already hit bottom. Let's get into that. This could be a couple weeks or a couple months, but when this time Bitcoin starts to go, it's going to be massive. That's why I have the S&P 500 opened up, the Nasdaq, because it's exactly what happened. While the intersection point that I was talking about was at the top. You see Bitcoin and the S&P 500 in that time of December 2018, it just kept going. It just kept going up. I'm talking about December 2017. That's where I just got lost. December 2017, it just kept going up while Bitcoin went down. I hope you guys see what I was trying to get at here. Yeah, if you guys liked the video, hit that like button. If you enjoyed it, hit that subscribe button, hit that notification bell, and let me know what you guys thought in the comments below. I'll see you guys in the next video. Peace out.